I'm Lisa Taylor. I am Executive Director of Future of London and Director of Coherent Cities. Really good to have you here today for the third in Future of London's series on learning from crisis, local economic recovery. And we have a great discussion for you today, and I'm just going to talk a little bit while people start to filter in. Today is a conversation. We're not doing presentations. We have three excellent speakers who focus on strategy and inward investment, looking at socioeconomic impacts of the decisions we make today. Really useful. The news today reported that 649,000 people were put on the rolls or went off payroll in March and April. So we're looking at investment in terms of development, also things that filter down to SMEs, local business, and jobs. This series, Learning from Crisis, is true to Future of London's USP in that we're looking at cross-sector solutions, at very practical and delivery-focused solutions. We look for diversity in thought and approach as well as representation, always been important to us. And we look at people, or we hear from people who are top tier now, but also up and comers and operational. So you'll see alumni throughout our whole series. This is the second in a three-part series on local economic recovery. The first one, which is already live, is on futureoflondon.org.uk. It was about everything from SMEs, small business, council response through homelessness and the creative sector. It was a great conversation, and it's already on the website with some really useful resources for you and some detailed responses to Q&A from our speakers, so look for that. The third one in September will be on paying for public projects in the current atmosphere. That started as a live sector in autumn and winter last year, backed by Montague Evans. Now, they're supporting this series as well, so thanks very much to them. You'll hear from economist Morgan Rees today, and we'll hear from them also in the Paying for Public Projects section in September. If you are using Twitter today, the hashtag is #LearningFromCrisis. Please capitalize the L, F, and C. Text readers can apparently read hashtags better if each word is capitalized, so let's help out that way if we can. We're at Future of LDN or at Coherent Cities, that's also me. And we encourage you to use the chat function at the bottom of your screen. We'll be doing Q&A after all three people have spoken, and I'll relay those questions to the speakers. So if you want to share questions or your experience of what's happening with economic recovery, please do feel free to use that. This is also live streaming, so if you're with us, you can sort of see it also on YouTube, and we'll do an edited version of the video without our ums and ahs after the fact, which will come to you through futureoflondon.org.uk. I'm now, because I've had an iffy sort of connection these days, you're seeing my unglamorous background. If a child runs in, it's not my child, so please come and pick up your child. Morgan has a cat. We may see the cat or we may not see the cat. You also have the choice, if you want to, as an individual, to see people who are not on video or not. So if you want to see who's joining us in the room and say hello to them, you can scroll through the guests. And I think, Safa, let's take that slide down now. So we can see our fellow guests, and as everyone else starts to filter in, already recognizing a bunch of people. So good to see you all. Just for those who are arriving late, this is the second in a three-part series on local economic recovery. We're looking at long-term recovery, and we'll be looking at the impact of external factors. I'm just going to stop you. Thank you, Paul. Just stopping Paul's video of eating a banana. I'm glad you're having breakfast. If you're on video, please turn your video off unless you're speaking. You are welcome to go and visit other guests in the room. And I think we're going to make a start. So today's speakers on long-term recovery, as I said just at the very beginning, represent inward investment into London. That's Laura Citron from London and Partners. Jonathan Martin works in the same thing at Elby Waltham Forest, which is one of the very forward-looking councils running through the crisis, have been really, really front foot on a lot of ways. And Morgan Rees is Montague Evans, economist and consultant. He's looking at the socioeconomic impact of changes to town centers, housing, and workspace. So a really good group today. We're just going to have a conversation with them and then take your questions as well. So we're going to start, first of all, with Laura Citron. As I say, if you've just joined us, you can use the chat function at the bottom of your screen to either ask questions or to see any good practice that you've shared and share that with us and the rest of the group. We will save the chat for later, so keep it clean. You know, I don't know if you know who you are, but just this chat will be part of our write-up at the end. And again, if you're tweeting, hashtag is @LearningFromCrisis. and we're at Future of LDN. I think we're going to make a start, definitely. Laura, we'll start with you. You are now Chief Executive of London and Partners. You've had a fascinating career, both in UK public service in Brussels, and also working in senior roles with WPP around the world, advising government on destination marketing, digital community engagement, everything that's really live right now. I know you taught about communications for behavior change and wrote on digital and public service. I've got your technical questions, but first of all, how is all that experience helping you right now in terms of what you need to do for this crisis?
Oh, good question. I think the thing that I'm trying to understand the most in this crisis, well, first I should say good morning, Lisa and everybody. Thank you very much for inviting me to be here. It's great to see everyone before we dive in. I think one of the things that's always difficult in these kinds of situations is to distinguish between what are the short-term shocks and what are the structural changes. And what we're seeing at the moment is both. And at the beginning of the crisis now, they're happening in parallel. So for example, at the moment, there is pretty much no inbound tourism to London. Now, clearly that's going to recover. So we've got a short-term issue, but we've also got probably, well, we know, a structural long-term trend in tourism globally that people are much more concerned about their carbon footprint, that travel will become a more expensive and a more premium product. And I think the challenge for all of us as leaders and as policymakers is to work out which is which, because they need quite different responses.
Thanks for that. A really good point to make, especially on today's topic of long-term recovery. You have access to your own and additional data that's quite deep and extraordinary. What are you hearing and finding out now? What can you share about the data you're seeing looking ahead, perhaps, to the next 6 to 12 months?
Yeah, well, let me share what the data is looking like for tourism, inward investment, outbound trade and major events, because the patterns are quite different actually. So if we look at tourism, or let's talk more broadly about discretionary consumer spend, so the spend that supports retail, hospitality and culture broadly. At the moment, the only available market to us is Londoners, because there is no effective UK domestic travel and there's very little international. So we're very focused on trying to encourage Londoners to get back out and about spending in their local economies. And we're working with a lot of London boroughs on the Because I'm a Londoner campaign to do that. I think I expect most people here are aware that central London is suffering far more than outer boroughs. Central London footfall is still at -80%, -70%, whereas in other boroughs you're seeing it more like -40, -50. And that's reflected across the UK, where city centres are seeing very low footfall, not as bad as central London, where they're most affected, but city centres are seeing much lower footfall and much lower spend. It's clear that some of the central parts of London can't survive for very long on -80%. I mean, no business can, they're just not viable. So I think that's concerning. We would expect to see UK domestic travel pick up a little bit in the autumn, and we're working with Visit Britain on that. But the consumer sentiment shows quite clearly that people are nervous about city centres and would prefer to take their holidays in rural and coastal areas. So we'll have a real job to do reassuring people to come into London. And then looking towards the autumn, in the long run, the long run outlook on international travel, I mean, it's very difficult for anyone to see, but the sort of consensus forecast is that we'll be back at 2019 levels of international by 2024, maybe 2023. So it's a slow recovery on international travel. So that's the picture on tourism. On inward investment, the data is much slower. So it's not like with travelers, you can count them by one and you can see quite quickly what's happening, and you can see the Expedia and so on forward booking numbers. It's pretty granular. You have really detailed data. Inward investment's chunkier, so it's not so clear. But actually, so far, we had a really strong first quarter on inward investment. But to be fair, it takes us between 12 and 18 months to land a project into London. So the projects that are landing, that landed in the last 3-4 months were ones that we'd been working on since way pre-COVID. If you look at the forward pipeline, of course, that is affected now by the overall global economic slowdown. But I think what's interesting is to look at which sectors look the most resilient. And I don't, we can come on to this maybe later, Lisa, but we're looking very carefully at which of those kind of specific verticals we think are going to be resilient for inward into the future. The other thing we're seeing is which was already happening, but like many things has been accelerated by coronavirus, is a change in the pattern of inward investment. In that previously people would invest in London typically by setting up a marketing or sales sort of rep office to build up the business, and then would follow that with more operational functions and R&D functions. We mostly deal with tech sector investors. What we're seeing now is that actually businesses can trade with London very effectively without creating any jobs in London, because what this crisis has shown us is that actually virtual meetings work totally fine. And that has a dampening effect on foreign direct investment, because that imperative to put boots on the ground, to go out and do your business development and build up your UK sales pipeline or your European sales pipeline, which is why people invest in London. Oh, well, now, you know, I can do it from Berlin, I can do it from Bangalore, why would I bother? So I think that's a longer term sort of structural trend that we need to look at, which is why would you actually put jobs in the city? If we look at trade, so London-based businesses expanding internationally, actually that's going great guns, really strong. We have fantastic scaling businesses in London that are right at the forefront of the real global growth sectors, and the work that we're doing with them on the Mayor's International Business Programme is having really strong results. And we're seeing some of those London-based tech companies start to really get great traction internationally. And I think that for me is the silver line, not the silver lining, but that for me is the real exciting spot that we can see. I think inward investment is going to be much more difficult than export over the next 6 to 12 months. And then finally, I just think it's worth saying that our major events sector is still completely closed and there is no date for reopening. And that's a real issue, because big business conferences, conventions, trade shows, first of all, are a huge driver of international visits into the city. 4 million a year go to the Excel Centre alone, just the Excel Centre. But it's also a real driver of trade, and it's what gets people into London. They come into London for a conference, then not only do they spend money in the economy, they also have business meetings around it. And so having no business events happening and no date of when they're going to start again, whilst nearly all the other European cities are back hosting big events, is quite a big problem for us at the moment. So I'll stop there, but I hope that's helpful on a bit of the data and what we think is coming up, to the extent that anybody knows.
It's very helpful. Thank you. I think in terms of what's coming, what we're hearing, I'm also wondering I'm not wondering what's going on with the resolution. What London and Partners is able to do to try to move some of that ahead. You talked about trade and so forth. What are you working on now to try and improve the picture?
So on inward investment, it's all about being really focused on those sectors that we think are going to grow. And we've just done a big piece of sort of data analysis work to really understand what we think those are. So areas like e-commerce, everything that's around content, gaming, streaming, voice over IP, collaboration software, virtual event tech, med tech, health and well-being, insurance, some of the other financial services subsectors, cyber, we think is pretty resilient. So that our international teams, who are our scouts that go out into the tech ecosystems around the world to find companies that are going to be the next big thing, are now really going hunting very specifically for those subsectors that we think are resilient and are going to be growing going forward. So that's the main thing on that side. On the trade side, we've continued our full program throughout the lockdown. We're running virtual trade missions. So we've just had one last week, actually, to 3 Chinese cities with a group of London-based urban tech, smart cities and prop tech businesses. And actually, it works really well. It's far more efficient. There's no jet lag. There's no carbon footprint. You get great access and great meetings as long as you put in the legwork. And we've just had a group of businesses pitching big investors in China, pitching some of the really big Chinese property developers to work on some of these huge urban developments and schemes that they have going on in the big cities, and getting real traction in those markets. So I think that's definitely something that we're going to continue to do. If any of you in boroughs are involved in your local business support and you want to refer companies to join the Mayor's International Business Programme, please do. It's completely free for the businesses, and the eligibility criteria is they need to be turning over at least £1 million a year, have 10 full-time employees, and have 3 years consecutive revenue growth over 20%. That's the minimum eligibility for that programme. But so I think that's really exciting, and we're going to keep doing that. And I think we can actually do more and better trade work now that everyone can do it virtually.
Okay, and it's more affordable for people, definitely. It's not the discussion of do we go to MIPIM, it's is there a virtual MIPIM or do we do something completely different? I think if we can share some of the criteria that you had on the website after, that'd be quite helpful for people to be involved. What you said also links in very nicely. I'm going to go to Jonathan next, but one of the questions that I had was, there's a tension now. We interviewed Barbara Brownlee along with Tony Travers about Westminster City Council, and they're saying, well, we don't want people staying out, in the outer boroughs. They should come into the city center. But it feels like there might be an increasing tension between inner and outer. I'm going to address that to Jonathan and Morgan, but do you have a take on that in terms of how people get along between inner and outer boroughs in places like this, like Manchester, etc.?
It certainly looks like there's, to my first point, that there's short term and there's long term. It's clear that in the short term, inner London is very severely affected, but once offices start to reopen, we would expect most of that to come back. And once international tourists come back, they're obviously very heavily concentrated in inner. But alongside that, there's probably a longer term structural change, which other people on this call much more expert on than me, in that these patterns of home working are likely to endure. So will we ever get back to the office occupancy levels that we had pre-COVID? Probably not. Well, let's see, right? Time will tell. I think what's important to recognise on a sort of global perspective is what makes London globally attractive for inward investment. And it's very clear what those things are. We survey endlessly on this. It's talent, that you can get the best people in the world here. And the talent is here because of lifestyle and culture. Best people in the world want to come and live in London because you have a world-class lifestyle and culture offering. A lot of that, when people internationally think about why they want to live in London, they're thinking a lot about West End and Central London cultural attractions and the offer. They're also thinking, I can have a nice life with green spaces and live in a lovely area. So that matters as well. But I think we need to be really clear how important that world-class cultural offer is to our tourism, to our students, and to inward investment because of the effect it has on talent. So I mean, there are people who are looking very carefully at what they think the future of office is, and I think that will play a lot into the future of work, and that plays a lot into what happens structurally between inner and outer.
Okay, thank you, Laura. That does lead beautifully into Jonathan's. I wanted to find out from Jonathan Martin, who's Director of Inward Investment at Waltham Forest, surveyor by trade, but now responsible for inward investment to the borough, including regeneration, housing, town centres, business and employment. How much of what Laura said resonates for you and what you're experiencing, Jonathan?
Well, firstly, good morning, everybody. I have really listened and liked what Laura's had to say, particularly around the aspects relating to inward investment, which is the main part of my role. I think certainly it resonates with us at the local authority, and we've had to really take stock of what is our role to counter some of the points that Laura's made around the threat and the risk that we've seen from the impact of COVID. How have we done that? We've effectively really looking to instill confidence with our businesses, with our residents, but also most importantly with our existing investors, which are our most important investors, as well as potentially new investors. So how have we done that? We've effectively maintained our programme of planning regime. So we're one of the first boroughs to hold a virtual planning committee to ensure that we could keep that pipeline of planning applications coming through. And since then, we've had several more planning committees. We've gone on to virtual cabinets, again, to make sure that the regulatory functions of the borough are able to proceed. We have also instilled a confidence boost in engagement with the investment and construction market, within Waltham Forest, particularly to make sure they're aware we were still open, that they knew exactly which department to talk to about their schemes, and we could then enter a dialogue, particularly around how we potentially needed to reset any schemes they were bringing forward, but also help in terms of providing advice on how they can bring those schemes through our planning process. What does that mean in terms of actual help and delivery to our small, and I suppose the best way to put it is we've got a very eclectic business base. So we've got over 10,000 businesses, of which circa 94% are 10 employees or less. So micro businesses in the main. That's a very eclectic mix of business base to engage with. So we've set up a top 20 forum. We engage with them as either the top 20 largest employers or by significance in their sector. So we get some sort of feedback in terms of what can the council do to improve and help them during this period of the COVID impact. What we've gone on to do is really understand some of those key sectors, again, coming back to Laura's point, around what are significant sectors for us. And one of those sectors is construction. It makes up circa 20% of our business base. So what we undertook was a letter to all of our construction sector. And in that letter, we set out various things we could offer by way of business grants, rental holidays, that sort of thing, if they were tenants for us. But importantly, we also set out an agenda to set up a workshop, which we held on the 26th of June last month. And that was entitled Doing Construction Business in Waltham Forest. In it, we opened up the process for our procurement and our tendering pipeline so that SMEs would be better skilled at being able to bid for work that is in the pipeline to come up through and engaged with the local authority. And we've seen that as a really good way to show a barometer of what we're trying to do in engaging with our businesses and also help them see that there is a future pipeline coming forward. Practically, we've got a building pipeline which is being delivered through 60 Bricks, our development company, and that reopened most of our sites in mid-June. That protected about 190 jobs, as well as obviously the supply chain, and is going on to deliver, that target of circa 18,000 new homes over the next 10 years or so. So again, we're putting our money where our mouth is in terms of our delivery and pipeline. What that meant in terms of protecting jobs was not lost on our political leadership, which has been resolute in embracing this growth and embracing this continued push towards inward investment, instilling that confidence that we need to show to our investors. We've also gone on to really look at how we can support our local businesses with the immediacy, again, as Laura touched on, with business support, shop local campaigns, obviously, meanwhile use for vacant and public land in our town centres and high streets, and also a rapid employment service. We've done that through a jobs brokerage tailored service to make sure we can get people into jobs as they become available in a far shorter time frame. Of significance though, and again, through that virtual approach, we approved over £500 million capital investment strategy through our cabinet. And that set out pretty much our building programme for our homes, creating jobs as well, leisure facilities and schools. So that was something we saw as absolutely tangible to showing there is the way to build our way out of the crisis we find ourselves in. In terms of what we're doing to support that with corporate estates, we knew that if we put our own estate into the mix, we could bring forward high quality changes in places and really start to anchor new communities within the existing communities. So it's all about integration. There are no blank canvas empty sites that just simply drop in what they want to drop in. It's got to be integrated. It's got to have reference and respond to the environment that those sites are being brought forward in. So we've really been pleased with some of the examples we've taken forward, such as we're working on a new comedy venue known as currently EMD Cinema site. And that will be the largest outside central London comedy venue in London. And we are looking at 1,100 seater venue working with Soho Theatre. So again, we're building on the legacy of the cultural aspects. And again, just touching on Laura's point on that importance of the visitor economy and the cultural aspects to our borough. That's part of our DNA. It runs through us as a golden thread. And what we've seen is we've had to put our entire cultural programme onto a virtual platform. So there are no external cultural events. It's all gone onto virtual platforms, and we've seen great success with that. Where we have got cultural events that have been able to come forward, it's been around things such as Walthamstow Wetlands, which has seen over 250,000 visitors visit that particular location in the pandemic, which is a huge number. We've managed to maintain a lot of these visitor attractions as being open throughout the lockdown period for that health and wellbeing agenda. And again, it's instilling confidence that the councils had to pivot from what it was as a local authority to an emergency response agency. And one of those important points was making sure that the inward investment service was still seen as open and still seen as able to be engaged with. The feedback we've had from that has been very strong. And again, referencing Laura's point, there's a lot of interest in the real estate sector in our borough and in Greater London generally. I think a lot of that's down to good connections. So where you've got good transport links, we've got 2 tube lines, we've got an overground, and that's something we've really prided ourselves on. We're putting investment into our tube lines through the central line. We're effectively improving Leighton Station to the tune of about £18 million, of which we're contributing 9 million as the local authority. And again, that's to improve access and egress and put it onto the step-free access programme. That's something, again, that instills confidence. It's in a growth and strategic location. So for us, we know that the number of residents there is going to increase significantly. So again, that's where the council's really looking to put a lot of focus around its capital investment. What are we doing around the high streets and businesses? We're working with our business sector. We've set up a business directory, which essentially links our businesses to each other on a peer-to-peer basis. And that's something we're also looking to keep going forward as we start to transition out of this sort of pandemic crisis. And obviously, there's a big issue about maintaining the confidence of our residents and our existing businesses that they can still maintain their businesses in this area. We want to obviously encourage new businesses, and we really welcome and support the great entrepreneurs and also the developers that are already in the borough, but those that are still coming to the borough. So finally, just linking into the inward investment piece and how we've transitioned, again, the entire Invest Waltham Forest programme is now online. It's a virtual platform. We've held 5 major events over the pandemic period, and what we are now looking to do is really follow those meetings up with one-to-one sessions where we would have held physical investor tours around the borough. We're now doing those virtually. So that's something we've seen work really well with our planning regime, having virtual planning discussions, having engagement through virtual online sessions, and therefore being able to still maintain the immediacy of ensuring the pipeline of development still comes forward. I hope that answered your question.
It answered all my questions, Jonathan. I think you've done this before. You've had this conversation with other people before. Thank you for all of that. A lot of things to touch on. Hello also to everyone who's watching live on YouTube. I know there's a whole other group over there watching us. I was quite fuzzy before, so if any, we're not sure what's happening with the connections these days. We just keep rolling. Jonathan, I did want to check. You've done some interesting things in Waltham Forest, repositioning some of the Borough of Culture stuff that you've done, and some small grants. You've talked about health and well-being. It's interesting the fact that the Walthamstow wetlands was ready in time for this. Things that used to be kind of nice to haves and second tier culture and environment are becoming kind of lifelines for boroughs like yours, perhaps more than central London, though there's an element of that as well. Any thoughts on the sort of changing priorities towards the sort of softer side of regeneration coming forward?
I think that's a really interesting question, certainly in terms of the benefit we saw from being the first borough of culture in London. There was a great bringing together of our residents, and some of the feedback has been that they've really enjoyed the experience of getting to know their neighbours, the communities around them, and engaging on a more one-to-one basis. Obviously, with lockdown, we were in a position where we had to see that maintain in terms of maintaining that pace, and going onto that virtual platform was something we thought would really start to strengthen the role of the council in terms of keeping people connected, making sure people had access to that sort of facility. But also with the wetlands, as part of that health and wellbeing agenda, it's always been part of our regeneration programme to make sure we have access to green space. So we're arguably the greenest borough to the north of the Thames. We've got Epping Forest that comes down into the borough. We have been using the Walthamstow wetlands as a real showpiece to people around how you can access high quality natural capital very near to new developments. So for example, the Walthamstow wetlands bounds Black Horse Lane housing zone. And that's where we're bringing forward over 4,000 new homes now and 1,500 new jobs, with a massive creative sector which is based in our creative enterprise zone there. And what we see is that people love having access, whether they're workers, creatives, residents, to that wetlands experience. And because it's now more of a walkable city, there was another point that just coming back on that Laura made around, people want to have the resilience of things being close to them. So things within 15 to 20 minutes works really well in Waltham Forest because we have a lot of natural capital. A few minutes up the road, you're into Epping Forest. So that's about as green space as you could possibly want to get. You've got the Walthamstow wetlands. We've got Hackney Marshes, which bounder in the southwest. So again, we're encircled by green space. What does that do for us? It gives us a really good setting on which to grow. So when we're putting new jobs into the economy and into the various town centres, of which we've got 8 fantastic town centres, we look at how we can support those with access to green space. We've also made it much easier in terms of getting people to get onto cycles and walk more through our Mini Hollands scheme, which we rebadged as Enjoy Waltham Forest Borough. So that's improved the air quality, obviously not as much as we saw from the pandemic with the lockdown, but prior to that, we'd seen the effect that a child born now in Waltham Forest would have 6 months more lifespan than before the actual scheme started. And that's just in the period of 4 years of implementation. So we're going to build on, we're looking at a massive thing around how we can also build in the sort of climate change agenda with our growth agenda, and that's significant for us as well. So these are things we're sort of pushing on as high priorities in terms of delivering our ambition for growth. And we've set that up through a number of different commissions and different boards within the council auspices, relying on our partners because we can't do it on our own.
Thank you, Jonathan. I think, and your connection is getting a little sketchy, which is a nice time to go to Morgan anyway, and we'll go to the wider UK picture, but we'll come back to some of that. I think I want to ask all of you about the concerns about jobs over the next 1 to 2 years, and I'll come back to you, Jonathan, in a bit about a change of ask to your investors. But if we can, we'll move on to Morgan, Morgan Rees is an economist, a consultant with Montague Evans. He has long experience. He works across retail, leisure, housing, regeneration, infrastructure projects with public and private sector clients. He also works not just in London. So I'd actually like to ask you, first of all, Morgan, from what you've heard so far, we've talked about London and local councils here. What are you seeing across the UK? I mean, we talk about levelling up and how that might be changing. There's a new discussion, a white paper today on working with the other countries in the UK, but are you seeing similar experiences? Are you seeing best practice that we can nick for London?
Thanks, Lisa, and yeah, thank you to Jonathan and Laura for your contribution so far as well. I think we've got a really good session coming together here, and also thank you to Waltham Forest as well for keeping the wetlands open. As a local resident, I've really enjoyed that over the lockdown, so thank you very much. So as property advisors working across the UK, I mean, we're seeing lots of different things up and down the country, but I guess the overarching theme is that we're seeing a really proactive response, both from our public and our private sector clients, to some of these issues which have been brought about by COVID. So really noticing that people are taking the opportunity to think strategically about the role that their assets play within their local economies. And I think nowhere greater than this is probably in the town centre sphere. So prior to lockdown, as we'll all know, the high street was struggling as it was anyway, and particularly with a few really high profile administrations and collapses. So starting with people like BHS, but also likes of House of Fraser closing a large number of stores, and even the previously unimpeachable John Lewis closing a couple of stores as well, we've announced recently. So yeah, it's a real opportunity, I think, to think strategically about what the role of these places actually is, and what we do with some of these really large assets in prime locations, and probably the overarching one of bringing a wider range of uses into town centres. So areas which were traditionally dominated by retail, we're now seeing greater interest in bringing workspace into town centres, but also bringing more people to live in town centres as well. I guess not to diminish the role of retail, and I think there's a real drive as well towards a sort of, for want of a better word, a more authentic retail experience as well. So people are there's a real strong interest in independent retailers and providing the space which works for them, and things like artisan food markets as well is a real common theme, even in places further afield than the sort of the wealthier southeast. I think ultimately we're not really going to know what the full extent of the damage of COVID is going to be on some of these local economies until, particularly until the furlough scheme starts to be withdrawn, tapered out from next month. But what we are seeing some encouraging early signs of footfall recovering in some of the smaller centres up and down the country. I think this is the point that Laura made at the start of this talk, that it's the larger centres, the big regional centres, which are really suffering the most from the lack of worker footfall, but also from tourism as well. So yeah, we're seeing examples like, for example, that footfall is recovering much more quickly in Wakefield and Barnsley than it is in Leeds and Sheffield. And so yeah, I think there's a real drive from central government. I think I saw something from the Governor of the Bank of England this morning as well, encouraging people to go back into work in city centres to try and boost some of the economic performance of these areas as well.
Voila. You've also answered a couple of the questions we had about mixed use. One of the things coming up, of course, is workspace. We are working from home more and more. Laura talked about, international junkets that aren't junkets. People just have conversations over the phone. What are you seeing in your area in terms of potential changes to workspace, shrinking footprints or changing floor plates? What are you seeing?
Well, I think it's another one of these sectors which is laid largely dormant over lockdown. I don't think we're really seeing much in the way of office transactional activity going on at the moment. So yeah, it's another one where time will tell as to how far people will reduce their footprints and their floor plates. But I think it is probably a theme that people will be looking for more efficient space. But I think it's pretty premature to declare the death of office-based working. I think there's a lot. I mean, I for one, whilst I've enjoyed working from home and the convenience of it, I really do miss the buzz of the office and the collaboration which comes from that as well. So yeah, I think there'll be a role for both. And it's quite interesting, really, yeah, that we're seeing workspace being brought into town centres. I think one of the more interesting deals, which is not deals, but developments which is proceeding during lockdown, is over at Westfield, London. The fact that the former House of Fraser department store is now looking to be converted into office space and presumably flexible co-working space. So I think that's a real sign of the times, and I think we're probably going to see more of that up and down the country.
Exactly. You're absolutely right. We're hearing it from colleagues in Manchester as well, and seeing it in the news that this idea of shared space, including with arts and culture, whether that can be supported or not, is very interesting. Are there any other things you think we should be watching? You talked when we spoke earlier about accelerating trends in terms of, retail and online changing. Underpinning all of this, of course, is these big numbers in terms of people potentially losing jobs after furlough ends. Where are you seeing potential employment coming from in this mixed town center? Is it construction, as Jonathan says? Are you seeing any other areas for employment?
Well, yeah. Well, of course, construction is going to be a part of this. There's going to be a lot of work needed to be done, not just in renovating and rebuilding some of these assets, but also across the whole of the wider property. Across the UK as well, with some of the retrofit programs which are going on. I mean, there's a huge amount of potential there in terms of enhancing some of the sort of environmental performance of some of our buildings as well. And really, I think prior to lockdown, a piece of work I worked on with a county council in the east of England was looking at the construction sector, and yeah, there's a real shortage of construction skills in this country, and I think it's a real area which needs to be focused on. And likewise in other areas as well, skills is a really important area, and I think it's somewhere perhaps which isn't always brought into line with the thinking around physical regeneration. Is also about finding ways of upskilling local populations and really supporting the local skills infrastructure.
You actually, that ties into, you were talking a little bit about changing demographics currently and coming up, and, sort of the growing number of older people. I mean, they can teach younger people, but in terms of demographic impact, what were you sort of driving at there? Was that about housing or skills? I think that would be something to draw on as we move out of COVID.
Yeah, absolutely. So, yeah, I mean, we're not alone in this. Pretty much every industrialized nation across the world is experiencing a similar sort of process of an aging population. And yeah, we're certainly no different. So yeah, I think what we're seeing increasingly, a lot of institutional money in particular is interested in retirement living and other alternative living concepts as well. So it's not necessarily just at the older end of the spectrum as well. Just there's obviously the housing crisis isn't going to go away just because perhaps prices may fall a little bit during COVID, or as a result of any sort of recession which happens. We still need to build more, and if anything, over the last decade, it's got more difficult for first-time buyers to get on the ladder. So we're seeing concepts like build to rent coming forward a lot as well, increasingly in other centres, not just in London.
Thanks for that. This links into a question that someone in the audience here has done. People who are watching on video can't see the questions, but there was a question about whether the long-term economic and social drivers behind urbanization, intensification, et cetera, may not recover until we have a vaccine. So we could have a period of, who knows, it could be, let's say, 18 months-ish before things start to come back and the center of cities starts to sort of begin to recover. I mean, Laura talked about a gap between 2019 and potentially 24 till some of the inbound numbers and the tourism numbers change. But listening to all of you and knowing from having seen a city economy crash in Canada in the 80s, there's a time now for, you're talking about housing aging populations, which was an afterthought that wasn't thought out, retrofit, which has been ignored because it's too much trouble, not ignored to some degree, the green economy, the health and well-being agenda. It feels like there might be an opportunity now while we're in this down period where people need work and we need economic drivers to consider some of these sort of secondary, I guess, efforts or drivers of society. Do you think that's legitimate? I'm hoping for a yes, of course, but
No, absolutely. I think certainly the noises coming from government suggest that we're going to be spending our way out of this rather than having another decade of austerity. And I think if we are going to be spending, we need to get more from it than just simply going back to where we were before the crisis. And so yeah, that really is going to be about tackling things like the climate emergency, but also tackling inequalities as well, and some of the structural issues in our healthcare systems as well. So yeah, for me, I think it's about making sure that rather than just purely investing to get jobs back, which is obviously going to be a really important thing anyway, we need to try and do a bit more with that if we can, and also look at things like social value as well, and what we can gain through some of this investment. And I think to do that, part of what we might need to see is probably a reform in some of the way that investment decisions are made by central government. Coming away from some of the very basic sort of cost benefit economic analysis which is done at the moment, and take into account some of these wider impacts which manifest themselves in some of these interventions as well.
Thanks, Morgan. Laura, I'm going to go to you on that question from not only a citywide perspective, but with your sort of broader sector role and responsibility of tourism, inward investment, and so on. Does this idea of possibly changing the cost benefit approach make sense for you? Do you think it's something government might go for?
Absolutely makes sense. And we've been hearing a lot about building back better. We're certainly very focused on creating good growth for London, not any growth. So growth that is sustainable and inclusive and innovation-led, therefore high productivity and resilient. So absolutely. I think there's obviously politics involved in that this government is clearly pursuing a levelling up agenda, and sometimes that can be a non-London agenda. So I think it's incumbent on all of us to demonstrate very clearly through what we do how a strong London economy, a strong capital benefits the rest of the UK, first of all. And that's something that we're working on increasingly in partnership with the inward investment agencies and the tourism agencies of other major cities, regions, nations around the UK to really work in partnership and be a good capital, but also to highlight the very significant deprivation and well-being issues that we have in the capital. And there is a real, very important levelling up agenda within our city, which is sometimes overlooked in the rest of the UK, where it can be perceived that everything in London is fine and everyone in London is very rich, and we all, everybody on this call knows that that's not the case. And I think through the way in which we communicate about what we do and through the actions that we take, we need to be clear that there's a levelling up agenda within London as well as nationwide, and because that will be the way that we can secure that very significant investment for the kinds of schemes that you've been talking about.
Thank you. I mean, obviously, there's political dimension to getting that done, the sort of different relationships between the players and the parties involved at central and London level. I did want to go back briefly, though, to that question of the green agenda or green economic recovery at your level. I mean, at local level, at your level, nationally. What does that mean in terms of the actors that you work with, Laura?
So this is a real area of focus for us. We have a whole team dedicated to what we call the urban sector, but essentially green, who work to win inward investment from businesses who bring green innovation to the city. So clean tech, clean air, smart cities, urban mobility, electric vehicles, all those kinds of technologies. So it's something that we actively go around the world and try and find the companies that are doing the most innovative, successful things locally and bring them into London, working often very closely with Transport for London and boroughs on that. And ditto, where we have fantastic companies in that space in London and supporting them to access new markets. So for example, the group that we just took on a virtual trade mission to 3 big Chinese cities last week, many of them have technologies that in different ways improve urban well-being, sustainability, clean air in cities, and helping those businesses to really scale in London by exporting is also a big part of it. So yes, it's really important. The other thing that we have always done is try to encourage tourists through all of our tourism information, our tourism marketing, to behave in ways that are sustainable. So we're always encouraging our tourists to use public transport, to walk and cycle whenever they can, so that they have as positive as possible an effect through their own behaviours when they're in the city. So I guess that's the other area.
Thanks for that. And we'll come back to that China question before we break, actually. There's been a comment from Patrick Devlin at PTE about the idea that with people being in town centers, being in their homes more, retrofit is critical for sustainability. It's also a massive potential for jobs. I mean, there's a lot of all levels of skills in terms of retrofit. So I just, your thoughts, and I'll go to Laura, and then I'm going to go to Jonathan after that, on the idea that VAT should be equalized to make retrofitting a more attractable and affordable vehicle. Laura?
Not my specialist area or one upon which I have a particularly intelligent opinion. I think there are others here who'd have a smarter opinion on that.
All right, well, thanks for that. Jonathan, do you want to tackle that? And Morgan, I'm seeing sort of nodding. This isn't your policy area necessarily, but it has an impact.
It certainly does, Lisa, and I think certainly that that VAT levelling would be really helpful. We have run a carbon offset fund in the borough, which has really been looking at how we can support a number of initiatives that reduce the carbon footprint of various activities. We introduced and used things like Z bikes. We were really looking at that retrofit question. The issue that we obviously came across was the cost and also ownership. So a lot of the stock that needed to be retrofit wasn't in council ownership, it was in private ownership. So you therefore have to demonstrate the return on investment for shelling out all that money and having potentially decades worth of return before you see it leveling out in terms of the impact versus the cost, or the cost versus the benefit. So for us, I think that'd be a really good start.
Yeah, I think there was one of those Green New Deal was happening when I sort of came into this sector, and it kind of failed for many of those reasons. Too much hassle, not enough visible payback. There have to be other tools, but there are so many good minds thinking on this. I'm not sure if Bevan Jones is in the audience, but there are a number of people working on ways to make retrofit more attractive, including the GLA, and we'll share some of those resources on the website afterwards. So for anyone who's watching us on video, do check out the resources on futureoflondon.org.uk when we're done, because we'll share a bunch of information. Morgan, I'll go to you with this question about VAT, but also I'm going to ask about the China question. So what do you think about the value of changing VAT to make retrofit more attractive?
Yeah, again, it's probably not my area of to know the ins and outs of the VAT implications of that. But I mean, on the face of it, yeah, it sounds like it's something that we should absolutely be doing. Yeah, anything I think to bring the retrofit agenda forward is going to play such a big part in us meeting our obligations with climate change. And as Jonathan said as well, it's not just public buildings, it's all kinds of buildings really. And I think there's a real opportunity if someone can grasp it and in central government about how to align that with the need to potentially upskill potentially millions of unemployed people coming out the back of this crisis. Is something that we should definitely be doing.
I think there's definitely one of the potential job creators is the idea of building skills, because there's skills lacking in so many current and emerging sectors. That is an industry unto itself. So the touchy question that's in the news right now with Huawei being banned now, there's a question of what impact would that have specifically, but also in terms of overseas investment. There have always been sort of tricky investments coming from sovereign wealth funds. China is one that's got political implications now. In the last few years, they have become a serious player, some state-backed companies, some private companies, in terms of moving things ahead in London. We've worked with some of them at Future of London as well and had great relationships. But I'm going to actually, Jonathan, I'll start with you because you're unmuted. Not just about China specifically, but how do you prepare for working with a funder who you have to put a sort of a firm foot down? There was a quote on Radio 4 yesterday saying, it's not about shutting the door, it's about having a firm strategy from which to negotiate. Does that resonate for you?
I believe it does on two counts really, Lisa. One is that we make sure it's clear that we are a borough that has a very long and rich history and culture and heritage. So as I mentioned before, you wouldn't be coming in to just simply change the nature of a location within the borough. This has actually happened in one of the investment activities that we took part in about 2 years ago, where one particular investor wanted to buy up quite a lot of the borough in terms of potential for new homes and jobs. And just in that informal discussion, they had a certain view of how they would deliver that solution in terms of where the jobs would go, where the homes would go, where the culture would go. And that really didn't resonate with, obviously the political leadership or the senior executive in terms of what's already within the borough. We jealously guard the character we have within the borough. And we made that clear at the outset. So what that led to was an opportunity that really couldn't be progressed, because there was a clear difference of opinion in terms of our objectives and our goals. If we want to welcome, and we do welcome in foreign international and national investment, it's got to be on the basis that you're integrating into a well-established local landscape. So we set those out from the outset. How we make that clear is we work with things such as our economic growth strategy, which is a document that really held the sort of pillars of how we accept investment. What we've gone on to do going forward in attracting inward investment is we've launched our Economic Recovery Action Plan. So that's essentially now going to set out how we engage with investors, how we're going to bring forward investment through development, whether it's housing, whether it's for commercial space. But it's about setting out a clear and transparent agenda so that people understand from the very outset what we're looking for from them, and then also what they can bring in terms of innovation to the borough.
Thanks for that, Jonathan. I'll ask sort of a similar question of Morgan, this idea that not only, where is the money coming from? How do you sort of take your stance to accept that money and have it do what you want? How do you get the most, whether it's a country or a bank, how do you get the most bang for your buck?
Yeah, so I mean, it's again, not an area I've got a lot of experience in, to be honest, but in my previous life, before I came back into working in regeneration, I was working in the nuclear sector. So I think there's probably a fair bit of learning that could be made from there. So working on the joint venture between EDF, which is obviously French state-owned, and CGN, the Chinese state-owned nuclear firm as well. I think possibly in other sectors there's probably some learnings to be had, because quite often there are differences of opinion in the ways in which things should be done. I mean, from our perspective, particularly around workforce, in that case, it's the working practices to build a nuclear power station in China are very different to the ones to build a power station here. So I think it's about coming up with that sort of common understanding and trying to find a common way forward.
Thank you. And Laura, I mean, you're at the front of this. You are taking people to China to do negotiations with people who have the best intentions and great research, but there is this great big elephant in the room when you're having these conversations. How are you managing that? And what would, I mean, what's London and Partners, but what's your feeling about how we move ahead with this?
It's very sensitive. We have to understand that Chinese investment into the UK, into London, sits within a global macro political context and is very heavily influenced by that. So that's the relationship between the British government and the Chinese government, and the relationship between the British government and the American government set the investment climate for investment from China. And within that, there are things that we can do, but we have to recognize the extent to which that macro political context is actually what's setting the tone. My personal view is it's important to be quite nuanced. There's a lot of China phobia around at the moment. There are also some very legitimate security concerns. There's a big difference between different types of Chinese investors and different types of Chinese businesses that have very varied relationships with the state, from sovereign wealth funds to businesses like Huawei that have very large state-owned stakes to fully privately owned businesses. And many Chinese-owned businesses are in fact listed on NASDAQ, if we're looking at big tech companies. I also think that the intercultural relationships with China are very important. So China pre-COVID was our fastest growing tourism market in the world, admittedly starting from quite a low base, but we were doing 20–30% a year growth on Chinese tourists. And that's hugely important because it brings mostly young, well-educated, internationally minded Chinese into London to experience our city, to experience our values, to see how we live. And that creates that relationship that we can then build trade with going forward. Similarly, Chinese students are the biggest international student group in London, not only hugely important financially for our higher education institutions, but again, that exchange of ideas, that intercultural exchange, that building of personal relationships. We are then sending back people to China who are alumni of our universities, who've had 1 year, 3 years, potentially longer, living in London, having an international experience. And that's hugely important for the way that we can position London based on our values and what is important to us. So I think, yeah, two things. One, the macro political context matters enormously and it's not something we control. And secondly, the importance of building those personal relationships.
Thanks, Laura. We've had a question. We've kind of addressed this to a degree, talking about developers, people coming into local areas, but this question about Indigenous sort of UK-based or England-based investment as well. Morgan, I'm just going to come to you. This will be sort of our last question, but in terms of the use of council assets, I mean, Jonathan can answer this too, but what about investment right here on the local scene? Where is that coming from? Where could that come from?
Yeah, absolutely. And yeah, I mean, as always, you know, the sort of institutional investors are a huge source of finance for property related things in the UK. And yeah, we don't see that going away anytime soon. A lot of the big pension funds are already very heavily invested in many of our town centres up and down the country, in assets of all kinds, really. So yeah, it's I think the sort of trends we're seeing from them are, yes, they're looking at wider sort of ESG outcomes from their investments, as well as just long-term stable financial returns, which is really important and ties in with a lot of the topics we've been talking about today. But also, yeah, that they're prepared to advance some sort of new ways of looking at things as well. So some of these alternative living concepts, which I've talked about already today, but also as well as sort of pioneering some of the approaches to modern methods of construction as well, and sort of modular build and things like that. So yeah, I think there's a lot of UK money which is really funding some really interesting stuff going on up and down the country.
Okay, well, let's hope that continues. Very good to keep it here as well as bring it in from outside. I think that draws us to a close as well. I'd like to thank all three of our speakers, Laura, Jonathan, and Morgan, and to thank Montague Evans for backing this series again. It's really worth having these conversations. To say, if you're on YouTube, thank you for watching. The video will also be available after. Appreciate the questions coming through and some further comments. We will be sharing further resources from these folks and on the topic generally on the website, which is futureoflondon.org.uk. And you can also see the next couple of events in this series and in the Learning from Crisis series generally at the same site. We are at Future of LDN as well, if you're checking things out there. Thank you all for joining us today. We hope you have a great day. We hope you can use some of the stuff you've picked up today. I'm assuming Jonathan's Waltham Forest stuff is available to share. So we'll make sure that we do that. There's some information coming up on the screen for how to get a hold of us. And I think with that, I'll sign us off, and we'll see where the next, this is going to come up with our website in just 1 second, or it won't. There we are. So here you can see futureoflondon.org.uk, and that's for any future video events and write-ups and so forth. So thank you all for joining us, and have a fabulous day.